Hello, hello, hello. Mic test, mic test, mic test, mic test. Hello, guys, and welcome to the 141st edition of the Trading Opportunities webinar. So, yes, microphone looks to be working fine at my end, and thank you for the confirmation there as well. Let's get started very quickly with a very small introduction. As you guys know, my name is Nirav. I'm the admin owner of 50eyes.com YouTube channel as well as 50eyes market analysis. Sorry, 50eyes.com website as well as 50eyes market analysis YouTube channel, where we are currently going live alongside our LinkedIn page, of course. And this is the 141st edition of our weekly webinar series. In the last 140 webinars, I should say in the last 139 webinars which we have conducted so far, we have captured a total of 351 trades. What happened with the discussion of the last webinars trades, that is 140th webinars trades, we will see today. As such, I think most of them played out. Actually, all of them played out, and crude oil is still in play. And we will check every chart as we go along with the webinar. So before going further, a little bit about my work. I'm the admin owner of the mentioned YouTube channel and the website, as well as the author of the book Think with the Markets, which is an intermediate to advanced book for those of you who are practicing or applying Elliott Wave to your trading analysis. Apart from that, I also have a video course on Elliott Wave called Complete Guide to Professional Trading with Elliott Wave, which has 1600 plus students. You can check details for that by visiting 50eyes.com and selecting the link in the middle. There's also a free version of the course available. You can check it anytime by visiting the link in the YouTube description, which will also scroll on the bottom of the screen in a little while. It is again completely free. And here's the forecast accuracy of our work, which I have been compiling since 2016, which is when we started the forecasts in themselves. So the main thing which I want to show off here is that we have compiled an accuracy of all the webinars and the YouTube videos which I have uploaded, and so far the accuracy stands above 80% consecutively for all these 6 years. And here it is now loaded on screen. You can check any of these spreadsheets. Just scroll. You can check the date, instrument name, the analysis, and the outcome of the analysis. At the end, there's a tally, total number of analysis, what worked, what didn't work, so on and so forth. And the important feature is that it is much higher than industry standards. We have been giving this track record since the beginning till 2021, after which we started doing this weekly webinar series, which we will continue now. And here's the format which will go: Euro, crude oil, gold, S&P, and in the end, Nifty. Will also take a look at Bitcoin, which has given some clear movement. And lastly, if you are interested in more of my work, basically following the markets as we discuss here, but more detailed, then you can request details for our Slack private group by visiting the contact us page here. That's about it for our quick introduction. Let's now head over to the first chart of USD, after which we will discuss the actual chart. So here I have loaded the webinar discussion from 140th webinar. What we'll do is we'll just check what was being discussed on the chart of Euro USD in the last webinar, and then we will move forward with the actual current live market chart. So first of all, let's see what was being said. As you guys know, I was holding a short position in Euro in our last discussion. I made it quite clear, and this was the main analysis we had, expecting impulse down. One was complete, two was complete, three was here, and there was an alternate count again that was again pointing downwards. So that was the main theme on Euro. Let me just see if there was something else. Yes, we had an immediate target around this marked level as well. You can watch the whole webinar if you want the immediate targets here. As you can see, I'm pointing it out here in detail. 1.064 was the immediate target, and then we were expecting further lower levels. So that was the main theme on euro in our last discussion. Now let's head over to the live chart and see what was the play. So here it is, the live chart. Since our last discussion was on 8th November, so the price was somewhere here. 1.064 is obviously here somewhere, and this market has already hit that target minimum and then followed through, literally going as per our analysis. And as you can see here, 1, 2, and then we are in the double bracket 3, 4, and 5. So I actually booked my profits over here 2-3 hours before this webinar. So you were able to capture a move from here to here. Let's just check percentage wise. About 1.84% of the move we were able to capture. Let's also look at the actual trade posts which I have in my Slack private group. So here is the booked profit on all shorts. We booked the profits here. Price level is what we are interested, 1.05769. Right. And I'm just checking if we can get the entry level as well. Here's the entry of the shorts, 1.07083. Or is it an earlier trade? I'm not sure. Let's just go with it. So this was the entry 1.07083. I'm not going to spend more time checking every single entry here. There were some more posts. Somewhere here is the entry, or you can say we captured about 1.26% of the down move correction here to our previous statement or statement just made. So that was the short trade. We obviously discussed this in the live market in front of you last webinar. Those of you who were able to capture or were attending the live webinar and knew about the discussion, just let us know in the live chat as always. And I myself will look at the live chat. I seem to have missed that. Hello to you, Mohammed Daniel. Hello, Dawood Yunus, and good morning, Jeffrey, one of our members, as well as you at UAT. Good evening to you, one of our private Slack group members. So with that being done, I don't see any new comments. So let's go forward with the actual count which we have on screen here. So what we have is an impulse in play from this point of reference, which is the starting point of this count. We have a wave, one down, a two up, and we are assuming that the three is complete here. This is, in case you are unaware, an impulse in Elliott Wave terminologies, which is basically a five wave structure. First leg is down, second is up, third generally is the biggest, again down, and then once the four is complete in the upper direction, we get one more leg, which generally takes out the low of wave three, unless it's a failed fifth. So that basically means we have possibility of one more down leg if this count is correct, which also means that this becomes our target minimum 1.049 for the fifth leg down, and generally this level will be taken out to some degree. So it also becomes an entry for some skull position. So this is our expected progression on this counter. For now, we expect one more possible leg down. I have not taken any entries yet because we just booked our profits from last short. Let me push an alert there. So I will be interested in taking again short entries in this counter below 1.05122. Right. So that will be our idea for this analysis. And as far as the targets are concerned, I think our minimum targets are already taken out. So I'm not very keen on discussing targets here. I'll just stick with the minimums. We already captured a good percentage, 1.26% of the move down. I think it's quite enough. So this will be more of a either a scalp. If we take a small entry that will be around 1.049, then it will be a scalp, and around 1.051 we can hold it a little bit instead of getting in and out like a scalp. And as I mentioned, we're not very much focused on the targets. We'll just look to count the internals and or otherwise trail the position, because we have already taken out some important levels here. That's it for our quick analysis on euro. As mentioned, we were able to capture this as discussed in our live webinar from last meeting. That being said, I don't have anything much to add here, so I'll just move over to our next chart of crude oil. Let me just check. Hello, Manuel, one of our regular viewers. So, by the way, if you guys have any doubts or questions on this chart, just post it in the live chat while I quickly go and start a discussion on CL from here. So here's a chart of crude oil, and as you guys already know, we have a bearish bias. The setup was not exceptionally clear, so the bias was a little bit of what you call swing perspective and a smaller position size. As you can see, this last discussion we had daily chart on, so that means the perspective is being discussed as a swing. Anyways, the count holds A down, B up, C down is what we were expecting as the main theme. And I happened to take a short position on it. Not a very big one because it's a swing perspective on a higher time frame. So I will probably have to hold on to this chart, and it can take a good number of days. But anyways, here's the position. For those of you unaware, this is the count we are following. There are 2-3 variations we can take here, but all roads lead to the same path. So it's an A down, B up, and C down. We can take it as a complex, we can take it as continuing, or we can even take it as a triangle. But as I just mentioned, we are in shorts from a swing perspective. That basically means if the B is here, we expect straight down, or otherwise the second possibility is that within this box range we can take it as a I will have to hold it in such a wide range, 67 to 84. That is the reason for a very small entry and not a big position size, right? Personally, I think it is going to go lower right away from here. But then again, we know how markets are. They can do various different things. So that's why the position size is small. As far as the targets are concerned, let's see if I have worked out something on the downside. Yes, I have. Let's see, 62.97 and 60.2. So these are the levels for downside. Let me just remove the counts. These are the downside immediate support levels where we expect the market can find some buying or profit booking from shorts. On this daily chart, keep in mind we are using this data feed. If you are using a different data feed, the price levels which we discussed will vary definitely a little bit. So be mindful of that. Other than that, as I just mentioned, it's a simple ABC kind of progression is what we are expecting. And hence, at least the bare minimum we expect is a break of the last this low actually. Let me see where is the A low. This low, which is already taken out. So that means if the count is correct, we need to see a break of this low, 65.770. So 65.770 will be our T minimum. Quite obvious. And then these are the immediate support levels, 62.97, 60.2. That's about it for our quick take on crude oil with simple zigzag correction. Expected can become more complex. Let's say it like this. So this is the sideways range to be mindful of. Nothing much to add, and it's a risky trade. Keep in mind, it's a swing trade, so risk may become bigger because we'll have to hold it at for a longer period, possibly, not necessarily. So be mindful of that and avoid it if you don't know. It's not a very beginner's market at this point in time. Nothing much to add on CL. Let's now head over to our next chart. While I'll wait a few moments here to see if you guys have any doubts or questions on this chart. Just post them in the live chat. If not, we will then head over to gold. So here we are on the last webinar's discussion on gold. We had two biases. The main theme was to become mindful of the bearish outcome. And then there was an alternate view, which was suggesting possibility of bullishness. Let's have a very quick look at both scenarios, which were discussed in the last webinar conducted on 8th of this month. Yes. This is the first view suggesting that possible 3 is complete here. Brings targets 2595 followed by 2477 to the downside. And this was, by the way, the main theme, H1. And the second theme was that if we are wrong, the market can still go near the trend line, which I'll draw now on screen. Or perhaps the wave 2 is over, but we wouldn't know it until we see a break of the market to the upside. These were the two main themes here, and let's now see what happened. So here is a live chart of gold on screen. First of all, let's see on the higher time frame chart. What happened is the market did follow the main theme. It did finish off the wave 3 here, actually, which was our primary analysis. From this point of reference, the market has completed an impulse called the single bracket wave 3, as we discussed in H1 in the last webinar, and hence it will now go lower for wave 4. The marked targets are 2598, 2479. So as you can see, the first target is already achieved. And by the way, I had two analyses. One was a short term, one was a higher time frame one. I just want to check which one is 2477, 2595. Yes, 2477, 25. That is the analysis. So as you can see, our target one is already hit as per our last webinar's discussion. And the market is still continuing the bearish movement. It is below target one. So I am expecting that there's a possibility that this market will give a follow through to our target two, although there is no confirmation as of yet if it will go there or not. So in this kind of scenario, what we will do is we will look for more detailed analysis rather than this daily chart. Keeping in mind 2479, let's head over to a lower time frame and see what it's doing. We are analyzing the lower time frame from this point of reference, price level around 2790 for context. So there it is, 2790 for your context, POR. And from here on, we have possibly what looks like, I believe I've taken it as a complex. Yes, I have taken it as a complex. So we have an A, B, C, X, A, B, C. What we are doing is these A's and B's is basically I'm counting a double zigzag correction, which is represented, the first zigzag is represented by W, connecting wave X, next zigzag is represented by Y. And in case the correction is complete with the Y, the market will take off from here. If not, the market will continue heading lower after giving possibly some sideways move here for the Z. That's how triple zigzags work. Now we were able to pinpoint most of this leg down as well as this precise turning point. Let's head over to our Slack group and quickly check. Excuse me. Yeah, there it is. Where it is looking. There it is. Looks to be moving in wave circled double zigzag correction pullback expected. No confirmation for long trades. That is, we are not interested in the counter trend move here because it's possibly a wave X which will lead to another leg down, hence short lived. But we expect some corrective movement upwards after 2540, a little bit lower maybe, but then some corrective movement to the upside is expected. And as you can see, the market did, let's remove this for a second. So market did turn from literally 2537, the 6-7 points after we discussed the possible upward movement precisely following the arrows, expected more up move, etc, etc. So these were all posts made in our private Slack group. Again, those of you interested can find details by using the link or sending an inquiry using the below link on the contact us page. Right, those were the trades or the analysis I should say. And as I mentioned, we don't really have a very concrete outlook if this market will turn into a triple zigzag. Is it over? As I just mentioned, we need to be mindful of the fact that we have a downside target to 479, let's say, remaining, which will come around somewhere here. So if this market is indeed continuing downside, then this target is not very far away, and we will look for short plays below 2544 perhaps. I am not saying 2544 is an entry level or anything. It's just an idea that we will look to reevaluate the market for possible shorts. And if the market continues the fall, then around 24, let's say 2480, I'll be interested in looking back and seeing if we have hit our downside target or not. That is, if we are seeing a reversal or not for possible long opportunities. So that's about it for our take on gold. Again, one of the trades which was discussed in the last webinar, and it has played out literally as per our analysis, as you just saw with our last post and commentary. So I'll wait a few moments to see if there's any question regarding this. Analysis in the live chat, you can post it. Otherwise, we'll move over to the chart of S&P followed by Nifty, and then also look at gold. And those of you who are live in the chat with me, Just let me know how's my audio, video, and as well as the explanation speed, so that we know everybody is understanding what I'm saying. What I'm saying. Same, saying. Hello, Singali. Namaste to you. And Jeffrey says perfect. So in that case, let's move over to our next chart, S&P's 500. Where is the recording? So here's the recording from our last webinar. Let's see what was being said about S&P in our last discussion before we head over and discuss the current chart, live chart. So we were having a bullish count and an ultra bullish count. The ultra bullish count was that this is a dot one, dot two, and this is a dot three in play. Yellow count, that basically meant we can see a strong move in the other direction. That was the ultra bullish count. And there was a simpler, I'm just checking what was the other count. 6008 immediate target. I mean, it's already there. So I'm not able to find anything much here. Just check the whole thing in detail. I mean, it's 7-8 minutes long, so it's possible I can't check every second of it. But we had one very hyper bullish view and one less bullish view, and I was already holding longs on this counter. Let's very quickly check on S&P chart. Posts on Slack. What was the trade? When was it closed? So the profits were booked on 11th November. So booked profit on all longs, considering possibility of wave 5 completion. So I think it's the upside. Yeah, the upside of the trend line was the target. Yes. Above 6008. 6008 was the target as discussed in the last live webinar, and 6018, 10 points above the targets. We closed our longs, and the entry was 5891. So 5891 was the entry, and 6018 is the exit. So more than 100 points, pretty good, I would say. And of course, it was all discussed in front of you guys. So that's about it for the last webinar's discussion. Again, those of you who are following the live webinars and taking the trades, just let us know in the live chat for the sake of other viewers. Yes, so now we are looking for the current move. It's a little bit sharper than what I was expecting personally, but let's follow the counts at once before jumping to any further conclusions. First of all, what we are seeing possibly is 1, 2. I think that is the main theme. Yes, that is the main theme we have. Now, there are two things possible from here. One is that this is part of a bigger impulse, and this is just going to be a small correction and then up. And the second idea is that the correction is going to be deeper. How is that possible? It is possible because we have completed an impulse, and it is possible that, let me just show you by drawing it, otherwise it may become confusing. Now it should make more sense. So we have a high time frame impulse where we have circle 3 complete, circle 4 complete. And what we have now is either circle 5 complete or continuing. If it's complete, then the correction can be much deeper. It could go to 50, 300 and lower. Right. And second possibility is that the circle 5th is not really complete. It is still under progression, and what we see here is just part of the circle 3. circle 5, I should say, sorry. So circle 5's part basically means we have a circle 1 here, a circle 2 here, and 3, 4, and 5. So basically there is going to be a correction here, but the correction will not be extremely huge, or it will not take the market to 5300 levels. How do we ascertain that? Well, we don't have very clear idea here. Eventually the market should or is expected to go around 5730, or at least below 5817, I should say. So that is our minimum expectation, 5817 to the downside. Let me mark that. So 5817 and then lower levels are already expected on this counter, right? So let's see where it is on chart for the sake of context. Here, from the current price, which is 5872, right? So as I just said, minimum that is expected, and since it's a wave 2 can generally go to 99.99% of wave 1 for retracing the price action. Although in this case, I do not expect that to be the case, but that basically means below 5817, anything up till 5150 is fair play or expected play. And I have personally marked the support region between 5866 and 5828, although I think it's useless at this point. So let's conclude what we have discussed so far. I'll just draw in a few more points here. So see, generally wave 2 will go to 50-60% retracements of an impulse, and in this case the 50-60% retracement is coming over here. So what we want to do is mark those levels. First support incoming at 5817, let's just call 5820, and the next one is 5560 to 5454. So these are the expected support levels. I know the variation is huge. The first support is very near, and then the second support is incoming here. But that's how this market is. Of course, we'll also consider this congestion zone as our possible support level, and it has acted as a resistance in the past. Here, here, and then support in the future. Here, here. So of course, you know this level is also important. It is around 5700. So we have these levels, and as I just said, I'm not really interested in any longs. We did book our profits literally at the peak 6018. We booked the profits. The market turned around 6025, 26 something. So we were able to capture and precisely predict this reversal point, as I just showed you guys in our live Slack group posts. And now I'm not interested in any longs until we see the market take support around the one of the marked levels, and these are the marked levels. So wait and watch, as I'm not really interested in taking longs until I see some clarification. And as I just mentioned at the beginning of this analysis as well, this leg is deeper than expected, suggesting that this level will be taken, and at least we can see around 5700 tested or something around it. And here's a question from Jeffrey. Do you have a bullish scenario? Well, Jeffrey, that is the bullish scenario, that the market turns from 5817, which should look something like this. We don't have any confirmation, and I personally am not very big fan of this count at this point. As I just mentioned, the weakness is visible here, so I'm assuming something like this is more likely. So wait and watch, no longs whatsoever, with keeping in mind that we have a slightly let's call it moderately bearish sentiment right now. This is what I will call my hypo one. Down and then up. Hypo 2 is, of course, market takes support at 58.17 and then flies. Well, that's it for our discussion on S&P. Hopefully, you guys are clear on it. Hopefully, I cleared your doubt, Jeffrey. If not, just let me know in the live chat. Before I move over to our last two charts of Nifty, which will be followed by Bitcoin. Let's head over to our last webinar's discussion. Here is the chart of Nifty as discussed in our last webinar. Let's see the exact things we talked here. Yes, so here is the main updated view I discussed in the last webinar, and it was that expectation of another leg down, as this whole thing looked like an impulse 1, 2, 3, 4, and 5 for 1 or 8. 2 or B up, and 3 or C was moving in the downward direction. Let me just load the actual chart here for you guys. I have a lot of charts here. Let me just find the Nifty chart which we are following and see how things followed through from our discussion, which was on 8th of this month or 8th of November. So here is the current chart on of Nifty. The last discussion date, 8 November, the market was here. As you guys recall, main count from this point of reference of price 26,283 was 1, 2, 3, 4, 5. You get the idea. We had an impulse complete. Here is the theme, and we counted this as, let's call it an A. And the idea was that the B is possibly continuing. That's what we discussed in our last webinar on 8th of November over here. So either the B was complete here, continuing, whatever the case is. The idea was that this market will eventually go down, either go up and then down or straight down. So as you can see here, this market did go down. Our swing perspective of bearish outlook did play out as expected, and it has taken out 23,826, given us some exceptionally clear plays here, right? And literally worked out as per our understanding of this market. Now let's see what we can say about the possible upcoming moves, or theorize about the upcoming coming moves here. So if the B is complete here, then we have an impulse for wave C possibly, and I'm discussing a zigzag correction here, wherein the wave C will have either a diagonal pattern or an impulse pattern, and if you magnify it, it will look like this, which will have a wave 1, a wave 2, and 3, 4, and 5. So as you can see here on the live chart, we have the 1, 2, and possibly this is the 3. So we are expecting some corrective movement, because we are expecting a wave 4 here, and then there will be a 5th. So this is all so far as per expectation. I have obviously updated all of this live in the Slack, and based on this analysis, if it is correct, some sideways movement and another leg down is a possibility. However, I'm not very keen on taking this possibility into trade as it is. I will probably take some hedged positions, but not direct positions. The reason being that we have what you call possibility that this 5 may be very short lived in case this market is super bullish. We don't have any confirmation for it, but what can happen in a situation like this is Wave 4, whenever it completes, it can give just a spike for fifth. Spike can last in one candle, two candles, right? Not enough to take bigger trade positions, and then it can just reverse. So we need to be really cautious near these turning points. Just being able to predict them is not good enough. To able to trade them, we need special insight and consideration of what do you call counter positions, or I will not say counter positions, positions that can go against our expectations even though they follow our counts. So again, the scenario remains bearish. Our main scenario or main theme remains bearish, but we are not super bearish as of yet. So positions taken should be hedged positions, and better off we will be if we look for stock plays instead of the index here. But then again, it worked out so far, so it's a plus one for us. So far in our discussions, we see that our euro shorts have worked out. We have booked profits on them. Gold has gone down. We have even predicted the intermediate reversal level or expected intermediate reversal level. S&P went up as expected, and we were able to book profits near the targets as mentioned and shown in our Slack posts. And Nifty, as you can see, has also performed as per expectations. So now that leaves us with BTC. Yeah, before moving to BTC, one final word is remain cautious. While we are expecting a downside, I'm not giving any targets or anything, because the downside expectation can be very short lived and hence not very tradable. So it's more of a stock traders market. We do some correlation analysis and trade stocks instead of just taking trades on the index itself. So that being said, let's now head over to our last chart of Bitcoin. And Bitcoin, we have stopped following it in the last 2 3 webinars, and I'm coming back again here because it has taken out the levels of the upside bullishness. Specifically, first it took out 73,400, then it took out 83,646. Yes, that is compelling enough for us to look at it. And my targets may look very broad because I am on the daily time frame. So it's a analysis as per the swing discussion or the swing movement of this market rather than short term. So it's a higher time frame kind of analysis. From this point of reference, this is the price level around 64767. I have taken this leg down as an A, B, and C or WXY. Basically a correction ending over here. From this point of reference, we started counting an impulse up. One is complete, and so is the fourth. So we are currently in the fifth leg. Fifth leg is generally required or expected to go higher than the last high of 73,368. It has already fulfilled the bare minimum requirement, which moves our POR over here. So let's zoom in a little bit and see what's going on. So if your point of reference is, or the starting point of this count is at 49,723, around 50,000, let's just say for the sake of convenience, then we are seeing what I would call a impulse in the upward direction again for the fifth circle here. So from 50,000 roughly, we have one up, two down, and then three up is in play. Actually, I have more proper count already on the chart, so I'll just zoom in and show it. So we have one up, two down, one, two, and then 1, 2, 3, 4, 5. Let's call this a Roman 1. And then that's a Roman 2, and that's a Roman 3, 4, and 5. So that will complete the blue wave 3, and then there will be a correction for blue wave 4 and then blue wave 5. So that's our take on Bitcoin as of now. We expect that this market has at least One here, second here. This will be the double bracket 3. This will be double bracket 4, and then double bracket 5. So this completes the count, suggesting that we have 1, 2, and then 3 upside movements remaining, or up legs remaining, if this count is correct. So if we are expecting 3, that then I believe even if we are so very completely wrong, we will at least get, what do you call, one up leg in this on this counter, or at least 1 to 2, even if we are wrong, or if we are not completely right, I should say. So BTC swing perspective remains bullish, expecting 3 upside movements, and even if the count is not correct, 1 to 2 upside legs are definitely expected on this counter. Swing targets would be very high. If I just look at it, we have targets coming at 1, 2, 2, 8, 4, 6 moon high targets. Where are these targets coming from? Very simple. Channel targets, Elliott Wave channels, not your standard channels. And you can see how I have drawn those channels here. One second. So simply taking this target, it's 1, 2, 1, 2, 3, 4. Oh, funny that is. So immediately it's coming at here. 1, 2, 3, 1, 0, 1. So let's just call it 1, 2, 3, 0, 0, 0. That's the immediate target if this market is really super bullish, which it looks to be the case here right now. But as I mentioned, even if that doesn't work out, we are still expecting at least one up leg on this counter after a minor correction. That's about it for our take on BTC. More intermediate targets will become visible as we go along, or as the price action becomes more clearer, and I'll update them in the Slack group and possibly in our next webinar. And until then, I will say that's about it. Thanks for sticking till the end, guys, and thanks for sharing my content, obviously. And so far, with the help of you guys, we have been able to maintain 1,000 plus views in the last 2 webinars. That is exceptionally good, and I thank everyone who has continued to share my work, specifically Ativat, who was telling me in the last webinar itself that he has shared the content as well as tweeted about it. So every share counts, and even if 100 of you people share it and 5 social media networks or with 5 of your colleagues, that's 500 shares. A very big, very big number for us. Yes. So kindly continue doing your part so that we maintain the views, so that we can continue producing these webinars. They obviously take a lot of time and effort. I just condense my analysis very quickly for you guys so as not to take too much time in these public webinars. And I highly appreciate your efforts to keep sustaining these webinars and helping us reach the right audience. Right. So thank you for staying till the end, guys. And oh, I forgot a question here, I think. Would this make the wave 5 bigger than wave 3? If so, is that okay, or should we close it size one? Which chart are you talking about? I'm not so sure, Jeffrey. I missed you there. And even if the wave 5 is bigger than wave 3, that's fine as long as the wave 3 is not the shorter one compared to wave 1. That is, it should at least be bigger than wave 1. I'll just assume that you are talking about BTC chart and very quickly apply that assumption. Excuse me. Well, there it is. We will just check the assumption here. Yeah, wave 3 is quite big. 323.6% of 1. So we don't have any problem here. Well, that's about it, guys. And yes, Jeffrey, I just clarified your doubt. You need to be a little bit more participating here. You asked a question earlier as well, but never clarified it was clear or not. Okay. Anyways, that's it for the discussion, guys. And Luis, yes, you seem to be terribly late today. One of our very regular viewers, Luis. That's it, guys. I'll talk to you in the next one. Kindly continue doing your efforts and share the content as much as possible. And talk soon. Take care. You're welcome, Etiwet.